Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading. Today, market is down about 1.6%. There, on the S&P Nasdaq did get hit 3% negative along with the semiconductor Dow, also down 1%. There, Russell 2000 down 2.5%, transport down 1.3%, banks down, energy up, biotech down, healthcare down, home builders down, utilities up though, retail down, emerging market down. Market is been pounding. And on the buyers here, last several weeks, as you can see this, but this is a daily chart you're looking at. You can see right here, market's been plunging it very, very hard, imputing massive amount of fear. Everywhere you go, everybody is extremely, extremely fearful where the market is today, where the market might be. This entire market is gonna crash down or not. That is the discussion nowadays. We'll talk about all about that. Bitcoin is down 10%, gold, silver, minus up a little bit, dollar up, oil down, oil up, treasure bond up, VIX is down a little bit. Let's see what has to be about the ETF. Spider. This is actually the daily chart. Now we're currently looking at the daily chart right here, as you can see. This is daily chart, meaning each candle represents 1 day worth of data. So we're not looking like 6 candles for 1 day. One candle means 1 day worth of data. So this is a level. Ever since the start of 2022 this year, market has been tanking pretty hard after we've seen exuberant rallies since COVID lows in 2020 March. And right now everybody's freaking out. Because a lot of people thought that this market can't possibly see any kind of correction. But we have to understand, first of all, especially if you're a long-term investor, that correcting through about 20% or so, it is always considered a healthy correction. Historically speaking, even in a macho bullish market since such as like 1990s, there was ferocious corrections along the way. We're talking 15, 20, possibly even 25% or so on the S&P within the primary term uptrend. So if you're wondering if this market is ready to get into a bear market similar to 2008, I'm sure there are a lot of people thinking that that's what it's gonna be. I'm in the camp that, and if you think about this, even COVID lows, you know that I was bullish. You know that I was bullish at the long term. I also talked about the fact that this is probably COVID low. We're talking COVID lows right here. That's the COVID lows right here. COVID lows, I talked about the biggest buying opportunity ever, right? The lifetime opportunity, buying opportunity. Remember, you guys remember that? The video, the special report video, the biggest buying opportunity ever. Why though? Why was it the biggest buying? Not the biggest buying. Because, again, since the inception of the stock market, we've never seen, after 35% correction, that's 35, market has gone back up to new all-time highs in about 4 months. That has never happened. And then we kept going higher. Remember, Spider trading at 220, it went close to 500 in just year and a half. That has never happened. And because of sheer, duration or the period, amount of time that it got up so fast, it was the biggest buying opportunity ever because it gave us that steep 35% correction. So if you understand how this market has moved since 2020 lows, giving some back. About a 20, currently I think we're getting into what, 18% or so. Let's kind of double check that so we can have a precise number. 18.4 or so, give or take a little bit. About an 18% correction we're currently dealing with after this market has moved up quite a bit since COVID lows here. You can see about 120% move, right? So you can see we made 120% move in 1 year and a half, measuring since the COVID lows. So giving about 20% back to me as a long-term investor seems healthy. seems reasonable. I don't know if any of you guys running any kind of business, right? If you're running a business, you understand there's a cost associated with running a entity, right? You gotta pay the taxes, the insurance, the vendors, the employees. I mean, you have to pay everybody else before you get paid from your clients or customers. So there's always gonna be, once you get paid from your clients, your revenue will go up, and then you have to pay your expenses. If you understand the fact that market is gonna have its fluctuations, again, I'm talking to those who inspire to be a long-term investor. I'm not talking to day traders in this today's session, as I'm talking about the daily. I'm talking about the long-term picture of things, looking at things in the last 3 to 4 years. So I'm not at the camp, and just like I wasn't when everybody was, I'm the entire world talking about the Great Depression 2.0, missed out this entire move. I'm at the camp that this is, this correction, I think, is healthy after making 120% performance on the S&P in a year and a half. We needed to see some sort of a correction, right? And the thing about that is, a lot of people are trying to project this. A lot of people trying to time this over here. In doing so, a lot of people missed out this rally. So it's not always ideal if you're a long-term investor trying to forecast where that correction is gonna come. Instead, what you do is, as the market goes up, you unload some of your position, but still hold your core position. A lot of your position you gotta hold through, and then at some point you wanna accumulate. And then when the market makes market is ready to bounce back up, what happens is, usually, if you understand a long-term big picture, we see a correction, and the rally is always much bigger than the initial correction, right? If you thought you could make money shorting this here on that, COVID decline, you made a whole lot more, right? 4 times more going long on that rally that came subsequently after the COVID lows, right? So wouldn't it be better not to try to short these, corrections, but potentially buying near the lows? Because again, the next rally higher is always bigger than the previously, seen decline or correction, right? That's what we call higher lows and higher highs. That's what we call primary term uptrend. There's a couple levels I want to talk to you guys about real quick here, but I don't know, that took 8 minutes to explain, but sometimes I can explain all these things in detail. There are a whole lot of things you have to understand if you can truly understand the mechanic of this market, especially to understand the macro level. That's not something I talk a lot about. If you just focus on the short term, you're gonna constantly be living in fear. Anyway, so you can see we got a little bit of pivot right here again. So that's that level. We also have this gap, right? It's a small gap right here. That opened up, what day was that? That was March 26th. That's right there in that vicinity. Also, potential level of support from these two little valleys there, and that's in that vicinity. And right now, we're kind of trading all around my Fibonacci, last level of Fibonacci level here. So I reckon that this level, 390, 380, 400 or so, this band of support, let's give it band of support right here, 400, 380 or so. This level could potentially become a strong support. There gotta be at least a oversold bounce. You can see the market is oversold. Seeing that plunge for about a month or so. So there gonna be some kind of a strong bounce. So we've been talking about this. You can see oscillator did cross back. We're back to 65 minutes out here. Oscillator did cross back down. So right now the oscillator is elevated though, and that's kind of strange. We've been seeing some strange things. We wouldn't know exactly how this is going to play out until it plays out. Could this be kind of a massive bullish divergence? I don't know. Until this thing gets up, until we see evidence of that, we wouldn't know if this thing will turn into a macho, massive, major, ultimate V-shaped reversal that potentially be coming. We also talked about yesterday, 2017, 16, 17, 19, 2020, and 2022 of 20. not 2022, 2022 is this year, 2020, that this market is capable of performing some crazy V-shaped reversal. So we can't rule that out either. And when that happens, everybody freaks out. It's just because why when V-shaped reversal happens, why does everybody freaks out? Because everybody's missing it. That's why everybody's freaking out. And then when everybody's missing the V-shaped reversal, what does a lot of people tend to do? They start shorting it, right? Because they're bored. They're bored that they're not making any money. They're pissed that they missed out the lows. So what do the people do? They're shorting it. And what this market does? Annihilation. So you see, what I want you to get from this video is that you thought that COVID decline was so massive, you could have made so much money. You made 4 times more riding the rally that came later. So it makes sense, right? It makes sense to ride these rallies, not trying to short some of the. If you can't, if you can have to short it and you have a chance to do so, do it. But majority of times, you make more money and you can ride it much longer. You can really have that compounding effect working for you if you can ride these major rallies that could last years, 2 years, sometimes they could last 3 years. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and globe trading tomorrow.